Good morning, all. It's the 7th of May. We are Signal Centre Talking Ball. I'm Joe Neighbour, joined by Steve O'Hare on this lovely non-farm Friday. How are you, Steve?
Lovely, mate. Very nice, non-farm, and the sun is shining again.
Yeah, lovely. Not sure
Fantastic.
what impact sort of non-farm has these days, if any. It's
No, it's not as brutal as it used to be.
no,
Um,
especially
these
when you've got all
things,
these bubbles raging. It's
yeah, it's like think time out there.
yeah. I saw something on LinkedIn this morning. They was talking about it was just an image talking about Moderna, who created the vaccine in record time, got it out, worth, I think it says 56 billion or something. And
Yeah,
then underneath that, they had Dogecoin, which was created as a joke, which is now worth 78 billion. And
yeah,
I think we're ready to sort of just reset the earth now, aren't we? We just need to just, how can this be happening? It's weird, isn't it?
it is amazing. Yeah, I feel a bit silly, sort of like even thinking about it.
Just time for
But
a
it
big
is,
old reset.
yeah, and it will happen. Um, but I don't know what it is. Is it what the reset of? Well, people have been talking about pressing the reset button for years, haven't they? Especially when it comes to finance and money.
Yeah.
Um, and there's a sort of like big cause for it, and I'm sure it is a crypto-generated thing that's going to be the reset. I just don't know which one it is.
No.
Maybe it's not even out there yet.
Who
So yeah,
knows?
who
Amazon
knows? We
coin
just
when
got to,
that comes.
yeah, we'll just carry on having a go at all the ones that haven't been reset yet. So
uh, okay, so in terms of news, not really much that caught my attention. Obviously, I had these elections in the UK yesterday, which I don't know if there was mass participation in those or not. I don't know what the outcome's been or what impact it's going to have. To be honest, so apologies for not being across that, but I just
well,
don't
I
care.
saw I read a bit. I read a bit this morning. I think the turnout. I saw one headline: Hartlepool won't get the results because there's so many votes to count. And then it came out about an hour later, turnout
First,
was only 42% or something.
and they got their first Conservative government ever.
Yeah,
Leadership, yeah.
yeah, big swing. It sounds like Labour's had a bit of a torrid time of it, but the turnout's been pretty disillusioned. I suppose
Yeah,
that's the word we can use.
yeah.
Um, yeah, it didn't feel like anyone had the energy after the sort of year we've had. But I think it puts Keir Starmer pretty much on the back foot. But I'm sure he'll spin it another way,
Yeah, of course he will. Of course.
like they all do. Not just Keir Starmer, like all
No,
the
all
politicians do.
politicians.
I think we're all fed up with all of them. I think we
Yeah,
need. Cameron was showing me this guy who is going to be London mayor. What was his name? Nico.
yeah.
He's done it as a little bit of a joke. He's 23-year-old. They don't even pronounce his name right on TV, and he's getting more votes at the moment than the Green Party.
He's like the mayoral version of Dogecoin by the sounds of
That's it.
things.
Yeah, and I think it could take off. All we need to get is like Wall Street bets guys behind him, and
Yeah.
people like that. And it just sort of like makes a mockery of the whole system, but it sort of shows that people are a bit disillusioned with how things are working at the moment.
Mm.
So anyway, let's
Okay, onto
hit the
markets. So,
markets.
yeah, the inflation worries are continuing to have some impact, although not major. A lot of indices were up at all-time highs yesterday. A bit of flux on currencies, not an awful lot to report. Back to pushing on with the riskier assets yesterday, by the looks of things. In terms of Bank of England yesterday, they were all talking about concerns about inflation, but nothing that was sort of particularly groundbreaking. We had Andrew Bailey, the governor of the Bank of England, said those investing in cryptocurrencies should do so only if they're prepared to lose all your money. So he doesn't obviously have a very strong view on the crypto world. Other than that, what have we got today? We've got obviously non-farm payrolls. What impact that has, seems to be becoming less and less at the moment. We've got a couple of companies reporting as well. Of note in the Europe, we've got Siemens, BMW, and Credit Agricole. Nothing particularly stand out in the US by the looks of things. So, Steve, let's jump into some markets anyway. What have you got to show us today?
Well, the commodity markets yesterday for me technically worked really, really well. So I look at oil and gold. They're the main two that I'm looking at.
Did you look at silver as well? That had a big old move, didn't it?
You know what? I didn't look at silver, but let's start with that one then. So weekly chart and silver, we haven't sort of talked about it for a while. Still potential for a double top. But that would require a break of $21.64. So that's miles away. So let's forget about that. That's not going to be a double top. This is a bullish flag type formation. So this is probably what we're looking at more than that. Bang. Bang. I don't know whether it did it properly, but that's looking towards $50 for silver. If that's, let's do it properly, shall we? I don't want to sort of mislead when we're trying to be very clear about it. Oh, it is. Is this a log scale? Yeah, sorry. That's a log scale. So it's sort of like, that's why it didn't look right. Yeah, so heading towards the $50 level. Once we clear out the $30 level, that was obviously the sort of when we had the meme stocks kicking off back in February. Silver had a little bit of a run to the upside. And failed miserably, but then we seem to get having a decent trend higher again. So yeah, for me, that's the big level to watch. $27.28 trading at the moment. A really decent day yesterday. So looking at the daily chart, we can see the highest levels since back in February February this year. Yeah, so that's where we are. Looking pretty good. Gold, we talked about this, and we talked about the double bottom formation, which has played out really nicely. The target for that is 1835, and we're on our way. 1800 was the psychological level we talked about. Let's get it up on the 4-hour chart. That's where we sort of did most of the analysis, and it was a bit clearer there. Sort of 1, 2, 3, 4, and maybe a fifth 4-hour candle that rejected the 1800 challenge, and then we overcame it. Here we go, bang, from 2 o'clock yesterday onwards. We smashed through it, stops triggered, and a quick run up to 1820 as we expected. On a break of that 1800, we thought that stops were going to be triggered and it would move higher. So yeah, pretty much potential for the day. Again, I like these measured move targets. 1835, only $15 away, so that's not much on a intraday basis for gold, and it's looking pretty sparky this morning, so could quite easily get a continuation of that during the day into the weekend, which will be nice for gold lovers. However, oil didn't react the same way. Obviously the dollar came off, so normally the assets like oil, which is priced in dollars, and gold, which is priced in dollars, have a move to the upside, but it wasn't the case in crude oil. We've seen a sell-off, so there is a little bit of a topping formation here. I'm not entirely sure or entirely convinced by it, but we have on the daily chart, we got this bearish dark cloud, which I spoke about yesterday, and this led me to hit the gun-to-head challenge and sell it on the oil chart, and it played out really, really nicely. However, stalled and retraced a little bit from yesterday's lows, and this is also what I picked up on the hourly, well, made it into a 15-minute chart to make it a little bit more clear. This really lovely looking neckline, which comes in at 64.85, currently trading 64.72. And we talked about this forming the right shoulder, played out really nicely, as we say. We'll talk about that in a minute. But it really makes the head and shoulders formation look good. We've broken the neckline. We've come back, retested the neckline, and we've had a throwback through it. However, it does look to have stalled again. So if we do get this playing out, the measured move target for something like this, let's get rid of that one. That's a bit too. This would be the measured move target. So it'll be around about 62.80, which was the swing low from the 3rd of May. So that's the potential. Am I going to go again? We go again on this oil. Not sure yet. It's either that. I think I will. I think I will go with that again later. But anyway, let's jump to the indices, see how they did. They had another sort of move to the upside on the daily chart, looking very positive for FTSE. And again, this is on the back of a slight dollar weakness. So, you know, it's getting carried away just like its other brothers and sisters. There's the sort of upward trending resistance coming in at 7,200, lovely psychological number. However, 7,100 stands in the way. We've poked our head through it and held on, just trading below that right now. On the, we're still in an ending wedge formation on the daily chart on DAX. We had a little move to the downside, obviously, on the Tuesday. Came back Wednesday strong, and Thursday, Friday we've pushed above it. So ready for non-farm payroll news, potentially another push to the upside into the weekend. This just seems to be the norm at the moment. Dow Jones. Let's just get rid of these for a minute. It's all a bit messy. Dow Jones. We look at the daily chart and we look at the all-time highs again. So all-time highs this morning, 34,583. Nice. Doesn't look like it's going to be slowing down anytime soon. Again, non-farm, great opportunity to push a bit harder. The tech side of things not looking so rosy. We've had a decent day yesterday. We had this inverted hammer, which is a bullish signal, and this is followed by quite a meaty looking bullish hammer. That was an inverted hammer, bullish hammer there. That looks pretty decent. It's reacted off there really nicely. So I think if we can get a break of 13,678, we could see this extending higher. At the moment, it's rejecting it on a daily basis. We've had a move up there. Let's see what this afternoon brings. Anything can happen, but obviously we've got this underlying push into indices that we're seeing on a recurring basis like Groundhog Day. S&P's obviously new all-time high. Take that back, Steve. You're jumping the gun, aren't you? Pushing towards the new all-time highs. What did we get up to today? 4,210. So only 9 points short of the all-time high. So yeah, but it just looks a little bit overdone, doesn't it, on the upside? But yes. What we do, I mean, if you look at the weekly doesn't look very clever, to be honest.
Well, it's narrowing, isn't it? The ranges appear to be narrowing a bit.
Ranges narrowing, and these candles are hanging men, hanging man, shooting star, hanging man. I've seen this before, mate. I've seen it in a movie somewhere. I think we could be. Let's be very careful. Maybe even into next week. As I say, if we don't manage to push aggressively higher, I think we're due a bit of a correction in here. Only short term, so don't shoot me if you're a stock bull. Again, China for me is the one to watch. This one, if we get a break of 16,450, sayonara. Is that Chinese? See you later. I don't know. Not sure. That's B, Joe.
Thank you, mate. I was going to try and showcase our partners' Acuity. There, just to sort of get an idea about sort of sentiment towards these indices. Obviously, these guys are specialists in news and analysing all these data sources, particularly from Dow Jones. So, credible news sources and working out, the bullishness towards these markets or bearishness. So DAX sentiment isn't particularly hot at the minute. I think if you look at the US indices, though, it's just green across the board. I know, maybe not S&P. That's changed. Last time I checked, it was 100%. So that's changed slightly. Towards Europe, it's not looking so great. These are daily as well, time frames.
Yeah. So what does a 25-minute in the middle mean? And the countdown, is that the countdown
to the next
news
event
item?
Yeah.
Okay, cool. Yeah, I mean, these are great, and it's definitely something as a trader, it's good to incorporate that fundamental aspect as well. The macro aspect into your trading as well. So when the
Quite interesting
technicals
here.
look
This is
weak,
the sort of the price versus the sentiment and how the two work together. So in white, you've got the price, in blue, you've got the sentiment. Yesterday, sentiment was really high.
yeah,
And that, we saw quite a bit of divergence as the price actually dipped off. So,
yeah, nice,
is it coming in a bit hot? Is it
yeah,
justified? Who knows? Well, it's definitely not justified, but something to keep an eye on, I suppose.
yeah, brilliant.
Waiting for, quite a big old disparities there between
Is that Spanish? Is
price
it?
and sentiment on the IBEX, Spanish index. Anyway, let's crack on with some FX because I think dollar index looks quite good today, and I've been saying that for a while, I know, but we saw a breakout of this channel. We saw a bit of indecision. I often like to look for supports at the high of the prior candle to a big impulsive move. So we've got an impulsive candle here. We've got the high of the candle previous here, which was also a doji, which was at this 78.6% fib level. We've seen a pullback to that level today, and so far it's holding. So I think from a risk reward perspective, this is the level that I would be wanting to buy dollar index, because if it is going to rally, it needs to pretty much happen now. So we need to see some buyers come in. We've got a decent reference for a stop loss below this low here, and I'd be targeting a move up to this unfilled gap up here on the upside. I know we've got some trend resistance to overcome as well, but potential there for 5R return. Maybe this is a daily chart on dollar index, so we'll have to wait and see, of course. But I still think there is a bit of life in dollar index, and obviously we'd need to see probably some sell-off in other assets like equities for this to really get going. And I don't know when that will happen. As Steve
Never
just
going to
said,
happen.
this is probably never. No, the charts are just going on and on and on and on. Realistically, it will happen at some point. There will be a bit of a sell-off. I'm not saying it has to be a crash, but people want to get some value out of these markets. And at the moment, there isn't really any. You don't really want to be buying up at those highs. Ideally, you want to wait for some sort of correction, whether that be 5 or 10%. That would be pretty healthy within the grand scheme of things, and that would probably trigger a decent up move in dollar index as well. But who knows? The trends aren't favourable for that, but from a contrarian point of view and trying to find some good value in these trades, this is where I think there potentially could be some, but it may need a catalyst. Looking at some of the other currencies that are tied to the dollar index, this is cable. Not really much going on here. Mentioned that there's quite a bit of chop going on. Really, we're within this range between 136.70 to 140.004. So while we're within this range, I'm expecting pretty much more chop and sideways price action. If we can break above these highs here, then it would open up a move higher towards these highs at 42.41. Euro dollar looking quite interesting. Again, flip side of the dollar index, we've got this trend channel here. We saw a nice impulsive move to the downside, and now arguably seeing a bit of a retest of that candle prior to the big move lower. So the low of that comes in at 121.01. So I'd be looking to set some shorts maybe around that level. Depending on where you want to put your stops, you can obviously go above this high here. Or alternatively, you can go above this high over here. From a safety perspective, I'm looking at using that probably as a reference for a stop, but can understand why people would maybe want to use that. Now, in terms of looking for big moves, I mean, this might be super speculative and never work, but what I have been thinking here for a while is that a top is potentially forming in euro dollar. It's clean-ish looking head and shoulders potential pattern at the moment. It's not a pattern until it's broken the neckline, and the neckline is down here at this blue line, and even better probably these lows here at horizontal support at 117.04. If that can be broken, then I think it opens up a move to the downside. And the measured move, so taking the measurement from the head to the neckline projected lower, comes in at 110.58. So massive move potential there on that one. From a value perspective, I want to look for big moves, and that's one that could potentially play out quite nicely. So if you have your stop above that high there, on the 25th of February, looking about 6.2R. If you're more aggressive and have it above this high here that we posted on the 29th of April, then looking at sort of 15R, which is wonderland really, if you catch that right. Still not comparable to some of the gains that we've seen in crypto world though.
Yeah.
Okay, Aussie dollar potential again for a head and shoulders to be forming here. Bit of mucking about in and around here. Yesterday was a bit of a push higher. There's actually an increase in volume as well, so this potentially could become negated quite quickly if it breaks above these highs at 78.15 and then this high at 78.50. Then pretty ready to give up on that. But again, it's all linked to the dollar index and what happens there. What else have we got that's of interest? Euro sterling. So waiting for this to potentially form a bottom pattern. Nice turnaround yesterday after a bit of a corrective move to the downside. Looking for a return to 86.53 to initiate some longs on that one. Measured move of this potential head and shoulders pattern comes in at 89.66. Which if you're buying at that level I just mentioned at 86.53 with a stop below these lows, again, you've got two references here. You've got the low here from the 5th of May and the low from the 19th of April. Potentially some decent risk reward on offer if this can play out and break to the upside. So a few things that I'm looking at, but it just feels like I'm watching and waiting every day without actually getting any action on anything. So we may be coming to a point soon where we're going to see some big moves, but for now it's just more of the same by the looks of things.
Yeah, it does feel like it. It feels like there's a little bit of a sort of the bottle's been shaken up and the cork is about to pop. So
Quite
again,
possibly.
when the timing is, I don't know.
Yeah.
Gun to head.
Yeah, let's bask in Steve's glory from yesterday. So we were, well, frankly, shitting ourselves when you put that oil short on yesterday. Well, I was anyway, because it looked like you were going to get stopped out before we finished even doing the video. But in a very short space of time after that, you messaged me to say that you just hit target on oil, which I couldn't believe. I had to take a double take of that one. But now 80 pips in double quick time, which was 4R, which one of the biggest winners we've had for some time. So well done, Steve. Great call. Just goes to show, when you're picking these trades, try and pick them as close to where you think you're going to get stopped out. And that's where you're going to get your maximum R from, isn't it? So,
absolutely, yeah. I mean, like you say, it's high risk trading, but when they do work, obviously the reward is there. So, I mean, that was I was sort of like caught by as much surprise as you were, but it did look. I mean, just like drilling down to that 15-minute chart, just sort of like give me a little bit more confidence with that stop. Normally I would have placed a stop maybe a little bit higher, so the the risk reward would have been maybe 2 to 1. But when you sort of like you're able to get more on when you have that stop tighter, there's better potential. So yeah, it worked well.
Definitely well done. So I had a positive return, 0.25R, 17 ticks on euro, New Zealand dollar. So a little bit of assistance towards Steve's big win yesterday. But where does that put us overall? So a little bit of an uptick in the P&L, up 86.95% since we started this way back in October 2019. So we're still ahead, although it's not been great. We're still in drawdown from October. Hopefully, Steve, we can get going. Obviously, there's only two of us now, so it's going to be harder because we did have Ian previously. But
he felt like a bit of a drag actually, so I think it'll be easier now. Hi, Ian.
Right. Hi, Ian. What you got, Steve?
Viewer. I'm looking at oil again, so I'm going to go for it again. Where's it trading? Can you see the chart?
Yep.
It's getting short here. 64.64. The stop is going to be above this downtrend line and at 65.15, and the target I'm going to make it 63.15. So a bit more of a way to go. 3 to 1 risk reward. That's pretty much hoping that the move we saw yesterday really plays out and we get this head and shoulders formation actually sort of like playing out completely. The neckline is under threat. We've had the throwback, so let's go for it.
Lovely. Okay, I'm going to look at dollar index because as I just mentioned, on the daily chart, I like it when you get these pullbacks to what I consider support levels. So the candle prior to a big impulsive move to the upside. So we've got this high here from this doji candle that's posted on the 29th. We've run into that today on the daily chart. So I think it's kind of last chance saloon for this to work. So kind of where I feel there's maximum potential on the upside on these ones if they're going to play out, with some indication, from a technical perspective, that the pattern could potentially play out. So intraday chart, hourly, head and shoulders maybe. It's only potential. It hasn't formed. It needs to break above 91.43 in order to confirm that. So highly speculative. But if this is a right shoulder, what we have seen is a dip back to this 61.8% fib level from this low here on the 29th to the high that we posted on the 5th of May. The candles aren't particularly great this morning, although some longer wicks, which suggest that this support level is doing a job. So I'm going to buy it at this level, which is 90.82. What am I going to do for a stop? I'm going to keep it quite tight and go for a humdinger to try and end the week. And obviously we've got non-farms later as well, which could give a little tickle to dollar index potentially. Speculating on this completing, and if it does, the measured move target, so the measurement from the head to the neckline projected higher, comes in at 92.45. So I'm looking. Yeah, that's crazy.
Go for it. Leave it like that.
15.8 R.
Get in, Joe. See, I knew I'd wear you down.
I'm going to just make
reckless,
that a little
absolutely
bit.
reckless.
Why?
Why are you doing that? No.
Yeah,
put that back.
I want to give it a little space. Okay, 10R. Stop loss at 90.66. Target 92.44. And an entry at 90.82. What do I need on that then today, percentage-wise? 1.8%. Could happen.
Yeah, of course it could. Yeah, non-farm egg roll.
Yeah. Okay, cool. Right, that's two trades for you today then. Obviously, we've talked about non-farm payrolls coming out later. In terms of high impact data, obviously we've got the unemployment rate as well, both due out at 1:30. And there's a smattering of sort of medium impact data as well.
That's boring, mate.
Yeah, not interested. Not interested, mate.
Medium.
No.
We don't do medium.
All or nothing. Right, okay, Steve, let's wrap it up there. Have a cracking weekend. Let's hope the weather's nice in the UK. And yeah, we'll be back on Monday morning.
Cheers, guys.
Trade safe. Bye-bye.